Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we come to look at the week that was, we see that all three major indexes, the Dow, the NASDAQ, and the S&P 500 all rose nicely for the week, about 2%, and we can see we're up very nice for 2012, and anybody that bought from the March lows of 2009 are certainly feeling good. And you know my theme is always what's the catalyst, and what's interesting is that although the market rose 2% for the week, we can see that the S&P 500 is now at multi-year highs. We're above 1,400 for the first time since 2008. At this point, we're really starting to talk about these people who bought at the beginning of that 2007-2008 drop. These people are coming whole right about now. Anybody, and first of all, let's give them a round of applause for holding for 3-4 years. But they're coming whole, and it's going to be interesting to see how many just sell now that their positions are coming whole. So again, what's our catalyst? Because we're going to have to start fighting this overbought psychology, and you can see here that the latest investment sentiment survey suggests that more than 45% of the members of those who participated in the survey still remain bullish, and we can see that VIX, the fear gauge, is at a multi-year low below 15%. Below 15, it actually dropped 30% just this week. So, woohoo, the market is streaming along, but again, what's going to be the catalyst? And you'll see when we get to our economic calendar, we don't have much. And our next round of earnings season still is a couple weeks away. Still some ongoing concerns about the global growth and whether or not more stimulus is going to be needed, especially internationally. When we look here, the States, JP Morgan increased their dividend, which led to a 6% increase in financials, although Citigroup didn't really participate in that so much. And as the financial goes, so too goes the market. We'll take a look at Goldman Sachs in a little bit. And we can see that Apple, which released their iPad yesterday, yes, I have it, hit $600. I mean, think about that. Think about, first of all, anybody who could have bought Apple for $5 many years ago. But Apple was about $80, $50 not too long ago, and it's now $600. So going forth, and we begin to look at what's going to be our catalyst, and we can see the FOMC statement just kept things the same. That's why I'm not really paying too much attention to it. As we said, earnings season is pretty much over. We're waiting for the next round to begin. And we look at our economic calendar, and we see that there's really nothing. So what's going to keep this bullish sentiment in the market with no economic data? You guys know that I tend to like to go over to Forex and see what's going on there to see if there's going to be any daily catalyst to get that volatility in the market. But remember, VIX is at a multi-year low. Let's pull up the charts. All right, so we're looking at our market sentiment leaders. And the first we're going to look at the dollar. And the thing that's interesting about the dollar is that usually we have that inverse relationship, market up, dollar down. And we really did get that. But now we see the dollar moving up, and the market was moving up with it, although we got a nice pullback. But notice again, that's why I like to draw my lines. Where did the market fail? Right there at that, right above 81. So it's going to be interesting to see what goes on from here. Again, we're looking for catalysts. And of course, we're looking at what's happening internationally. Our market profile says that 79, almost 80 is our point of control. So we'll have to watch that. But dollar, a little bit stronger. So with the dollar a little bit stronger, what does that do to gold? It's weak. And we'll zoom in there. And we can see how it fell off, even broke the 200 moving average. Now it's coming back up, retesting that 1660. We'll have to watch for a break of 1625, 1630-ish to see if we're coming all the way back down to 1600. But definitely weak. They're strong dollar, weak gold. And for our pocketbooks, it all affects our pocketbooks, but here we are with crude oil. And we can see that 110 is where we kind of leveled off there. So we'll go in there and draw that off. I was watching 114, but 110. And zoom on in. And we can kind of see 50 moving average acted as support. What was once resistance will now be support at 102. So we'll have to watch what happens with this 102 to 112 price range. We certainly consolidated for a while, and so the market may do that also, especially if this whole Iran rhetoric calms down a little bit. So we'll see, but definitely sideways price action here on crude oil. So let's take a look at this big move up here in the market for this week. Again, a 2% gain, and we'll zoom on in here. You can kind of get a gauge of where we're looking at as far as targets, but we'll zoom in here. And there's our market again, over 1400 for the first time since 2008. Zoom in a little bit more. This is really the move up here. Nice bounce. And even when we fell back, we fell, again, what was resistance is now support. We fell right there. Also a little support there in the 50 moving average. This is back on March 6th. And then once we cleared 1377 here on March 13th, we really took off here. So again, as the candles get smaller, we may see a little pullback here. And again, what's going to be the catalyst? And even with this nice move up, we can see that our indicators now are definitely back in the overbought stage on the daily time frame. Now we'll go out to the weekly and kind of get a look at this, and you can see again this is going all the way back, and we still can't see it over here or what we're looking at. We'll see it in the monthly charts, but we can see just how beautiful this is weekly charts. Remember we said 10 out of 11 weeks straight up. We'll zoom in there and we get that nice little view right there. So we're some sideways move, but there's a beautiful candle right here. And again, for those who want to know, this is 1428 that I'm watching for my next potential price level. On a weekly, we're overbought. Interesting to get an up arrow in the overbought range. But as we say, you can see we were overbought for almost all this up move. For about 2 months, we were in the overbought rating level for stochastics. Now we'll go out one more time to the monthly, and then you can start to see where we're going all the way back here to May of 2008 is where we're pulling out this 1428 price level, and you really could go up to 1445 also, because that's where the wick is on this candle. But this also gets you a visual of what I'm talking about as far as being made whole. Anybody who held through this is starting to be made whole right now, especially once we get up here to 1445, 1420. Our monthly charts are now getting, so really we're really getting into dual time frame agreement. Daily, weekly, that's tri-time frame agreement, where we're all showing overbought. Before, at least we could say that the monthly had some room to grow, but we're really getting overbought here on the monthly for the indicators also. Now I'll come on back to the daily and switch over to the NASDAQ. And we'll see the new highs here above 3,000, 3060 here on the NASDAQ. And we'll zoom on in. Definitely overbought on our Three Amigos indicator right here. Same thing here. Once we broke 3,000, 3,005-ish. We really made our new push. In fact, I am going to go ahead and draw in 3,000. Of course, 3,000 seems like a nice psychological number for the market to break. All right, there we go. So we'll zoom on out to the weekly. Story is going to be the same. We have agreement between the markets right now. Beautiful move up here. But what do you see? We have the Nasdaq at all-time highs, while the S&P 500 is at multi-year highs. But we're in all-time highs here for the Nasdaq, and you can see for 3 weeks we were kind of battling with that 3,000, and then this week we broke through, overbought on our indicators. One more time to the monthly for the Nasdaq. And not only are the people from the made whole, they're now profiting. So the Nasdaq has every reason to keep going because nobody's now selling. There's no fear selling. There's no made whole selling. We're now above everything. But again, our indicators, even on the monthly, are hitting the overbought status. Let's take a look at some of our market leaders. We are starting off with the beast that is Apple. And really, even though I'm zooming in here on the daily chart and just looking at this beautiful move, look at this bounce off the 200 moving average and bam! Just beautiful. Really just a beautiful move. But what I want to also show you is this market profile. And you can see this volume that accumulated between 580 and basically 600. We also kissed 600 and fell. So there's a $20 volume accumulating right there in this range. And you can see our point of control is all the way down here at 533. And we do have a little accumulation around 545. So if we break 580, there is some volume vacuum here for us to fall down there to 545. But just beautiful. And of course, we peaked on Thursday, and then Friday we have the release of the iPad. Now remember what I said. The iPad's out, sell the news. You got to be careful here. But just a beautiful chart. Apple's definitely bullish. Amazon. Here's something that's interesting with the Amazon. We can look at the market profile and just see it's all just kind of accumulating here around 184. But what's real interesting about Amazon is that it is not participating at all. I mean, we're talking about how great the market is. It's up 2 weeks, and Amazon's really just been going sideways for a couple months here, not participating in this move. So Amazon for me, sideways. Google's trying to participate. It also made a nice bounce here off the 200 moving average. But then the earnings, well, really it did it here like Apple, but the earnings brought it back down. And now at least it's made it back up here to the 620 range, and it's hovering here. So it needs really to get above this area to start retesting this 670, really above 540. But if I zoom in a little bit here for you, a little more, you can see these wicks here at 625. So that's what I would be watching, which is basically where we closed here on Friday. So sideways to up for Google. Goldman Sachs, we talked about the financials being up 6% for the week, and really can see that. Goldman Sachs lives. Nice move up here. We broke the 200. We tested the 200, acted as support, and we're moving higher. So, I like to say sideways up, but don't forget it's in a downtrend. Long term, but sideways to up for Goldman Sachs. Very nice. IBM, participating with the market, making new highs. Look at that. Zooming on in for us. Rested, breathe, and so now we'll see if the market's going to breathe again here. Look at this market profile over here. A lot of point of control, a lot of volume down at 200. So we'll have to watch to see if we fall back down. But IBM definitely bullish. Intel is the same. So a lot of our market leaders are looking good. Amazon's looking the weakest. But we can see this nice move up here, all the way up here to $28. Then we kind of kissed off of that. Market profiles are right just below 27. You can see the volume that accumulated here at 27.65. So sideways up really on Intel, MasterCard, participating with the market, zooming in, really nice. Although you can make a great argument for a double top here at 426. Great argument for a double top. So we have to be careful, especially if we come back down here to 409, about whether or not we're going to get a break down to the 50 moving average. Look at that volume accumulating here at that 420 price range. Sideways up for MasterCard, but really sideways. We talked about Amazon, but another stock not participating in the move is Netflix. Netflix, at least it's found the bottom and it's made its way up, but it's found this resistance here at 126 and it's pulled back where the market is moving up. Look at this volume accumulation here at this 107 point of control. It's going to be tough to break down below it, but it's also going to be tough to move up. Finally, price line with the market participating, new highs. Look at this one over 600. Just great. Nice move up. Broke the psychological barrier of 600 on earnings and has continued to make its move. So definitely bullish on price line. So a lot of bullish stocks, a couple sideways up, and then Netflix and Amazon's are the two stocks that were not participating in the market move. As we come to our education spotlight, we're kind of wrapping up our discussions about trading plans. And we'll end off with what is our continued focus for our website, which is the psychology of trading. And we have to take time to recognize how our emotions interact with our trading, because our results are a result of our emotions interacting with our trading. Our green portfolio or our red portfolio results have a lot to do with how we handle our emotions. Not to say that if you're disciplined, you're always going to make money, but it is to say that if you're not disciplined, you tend to be losing money. So we always want to take time to recognize what do we think about the market, recognize our biases so that we can, be aware when our biases may be affecting our trading. So, what are some positive things you can say about your successful trading, and what are some positive rules that you can enact to keep you out of those emotional decisions? As always, don't reinvent the wheel. Find successful traders, ask what they do, and then do what they do. Now, what's important is that what they do typically has a different bank account than you do. So you still need to modify. And again, there's a lot of great strategies out there, but you have to find out the strategy that works for you. And we hope to do that through our coaching program. But again, focus on becoming disciplined and focused, and watch your trading results change. As always, like, comment, subscribe so that you can get the latest updates from us. And we do want to continue to spotlight our coaching and our managed forex accounts, put us to work, allow our expertise to be your benefit, full transparency for our managed accounts, individualized trading plans, and again, allow us to work so you can free up your time to do what you need to do, and let our expertise work for you. Because in the end, it's not about anything but you. It's about your ability to make decisions that benefit your financial future. Thanks, guys, and I'll see you next time. All right, Stephen, you can